Ladies and gentlemen, welcome to the Fintech Frenzy. Today, we've got a packed full list of stocks, okay? Not only are we going to be going through website traffic for all of the big names, SoFi, Robinhood, Coinbase, Affirm, all of them. We're also going to be going over some of the notes in Shift4's fireside chat that happened today. We streamed that live. PayPal's fireside chat that happened today. Also streamed that live. ARK Invest had some pretty amazing comments about Robinhood recently. I wanted to cover that. Affirm's in the news. Interactive brokers, more Affirm. It's going to be a fun one. So, how you guys doing? Making money out there in the markets? What are we saying? Do we think SoFi will let members execute level 1 options in the Roth IRA when they launch level 1 options? Members can't currently buy options in Roth IRA. I have zero idea. I hear some things from time to time. That's not one of them. Made money on Palantir. Awesome, dude. So made money like you have paper gains, or you actually closed out and you've made some real gains? All cash right now. Holy crap. All cash. Toto said that he's going to add to SoFi sub $7. Sorry, added to his SoFi position sub $7. Nice, guys. PayPal is back down to PayPal. Yeah, well, blame Tim Cook for creating a new animation for a service that was already existing. Yeah, that can hurt PayPal. Affirm probably a buy after Apple deal. Oleg, you're jumping ahead, my friend. All right, do we just want to jump straight there? So there was an article that came out today. I saw it on CNBC that said Affirm's buy now, pay later loans will be embedded into Apple Pay later this year. They're not going to be the only company that is going to start being embedded, but they are the only servicer that will be doing buy now, pay later. There's a bunch of other installment loans via credit and debit cards that'll be available, whether that's through Citigroup or Synchrony, these sort of things. But Affirm will be the only buy now, pay later exclusive solution that will be added. I think that's kind of an interesting add. So the reason why it's so interesting is that Apple has a pay later solution already, and it's not seemingly like they want to expand it. And so they're going with other solutions that, they want to give their users the ability to have great Apple Pay, experiences, but that it doesn't necessarily need to affect their balance sheet. So let me go see what Affirm Stock has done, because I haven't even taken a look. I would assume that they're up on this news, up 11% on this news and 2% in the after hours. That's to be expected. Apple's a huge player. So yeah, good for them. In terms of me holding the position or not, I'm not a shareholder of Affirm. I think they're great. Moves like this make me really think about buy now, pay later, because in my head, I cannot believe it's the hardest business to get into. Sure, it's an underwriting business, but there's a lot of banks out there. Affirm is just, it's weird because there are a lot of companies that have the ability and the capital to do what they're doing that say, hey, you know what, we're going to leave it to Affirm. They do it better. And so if they can continue to hold out that sort of strength, then they'll be a great company. And Max Levchin is one of the greatest fintech minds in the world. So awesome to them. But whenever there's companies like PayPal around that can kind of say, hey, we'll do everything in terms of payments, we'll be the digital wallet, we'll have the buy now, pay later and everything, I just feel like over the long term, they will have a better chance of success than Affirm. We'll have to see. And the truth is, if Affirm can last long enough to start developing Affirm Card longer and then eventually get into deposit accounts and debit cards and these sort of things, then they'll be fine. Where is Tanner? I missed the Beauty and the Beast podcast. Do you think I'm Tevis and that the other guy is Tanner? Because I am Tanner. I remember Alex Chris saying in the last few months that buy now, pay later was not profitable growth, that everyone and their mothers would offer that product. And for that reason, they had to offer it too. I mean, okay, but they do offer it. And the problem is that Affirm is only offering that. That's sort of the problem. So it might be not a great leg to stand on for Affirm if that's the only thing that they can do. A SoFi stock moderator checking in. Awesome to see. I got to get on Reddit. I'm a lurker, but I don't do any of that stuff. I talk to Vadim a lot. I'm pretty sure he's a moderator, and I think so is Data Driven Investing. Affirm is only buy now in Amazon as well. What? All right. Let's talk Nubank. Okay, so I will talk Nubank. Nubank has been suspiciously quiet. I usually see an article come out from Nubank either anywhere from once every other day. That's probably the lowest quality or quantity of news that we see from Nubank. So once a day or even twice a day. Okay. What's very weird is that I have not seen an article from Nubank in 2 weeks. So they've been very quiet lately. We'll have to see. They're still growing. I'm so stuffed up right now, so I feel terrible. But yeah. Oleg's just a hater, man. Nubank's not having any problems. It might have problems in terms of people's sentiment, but worry about Brazil. You know? Mexico's a small part. However, let's jump into the next piece of news. Let's jump into, do we want to do website traffic? Yeah. Yes. 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 Okay. So this is the last year of website traffic for SoFi, Robinhood, Ally, Upstart, Lending Club, Nubank, Venmo, Cash App, PayPal, Chime, and Coinbase. Did I get them all? Over here, if I just cut this last month off, you can see the spark lines and the companies that are doing exceptionally well versus the companies that are either staying flat to declining. So we saw a lot of them month over month see a decline. Going from the top, so SoFi saw a little bit of a drop off. Not happy by the size of the drop off. If it was just a little bit lower, I would have been a little bit more happy, but we're still staying in this upper bracket that we're seeing in these spark lines. We're not like falling down to where we used to be in the 13 million range. Fingers crossed, we'll see for June. But, Robinhood seeing a drop off, Ally seeing a drop off, Lending Club, Nubank, what is this one? Cash App. PayPal actually saw a little bit of an increase, but coming off such small numbers last quarter. Chime is continuing to do so freaking well. Just look at this. Like, people continue to show up more and more to Chime, using more of their services. One day that'll be a public company, but for now, we just get to watch and admire. Michael has started his position in Shift4. Why is that? What do you like about Shift4? Did you watch the fireside chat? Taylor's pretty cool. I hope to get him on the stream one day. Those types of guys I feel like would get on the stream. So I did this thing where I retweeted one of Jared Isaacman's tweets, and then there was like seven very high ranking Shift4 employees that were like liking it, retweeting it, shit like that. So I feel like they are very much uh, on those platforms, willing to chat with retail investors. It's a large part of their holdings, right? Um, so I don't know. I didn't tell Michael to buy. Absolutely did not. All the companies that pay SoFi are doing well. I don't know if you could say that, but there are some that are doing well for sure. The big ones are doing well. The small ones, huh. PayPal is going to be fine. Okay. So let's talk about Shift4 really quick because I think that that was a very interesting fireside chat. They were kind of all over the place. They spoke about some things that we've heard earlier, but I still think that it's important. They're really trying to show off that they have a different strategy for moving forward with their business. And that really is acquiring companies for the efforts of getting merchants at lower costs. This is not normal for the industry. Okay. This is very out of left field. So they're acquiring companies like Vectron, which they just acquired recently, which is a point of sale terminal company in Germany that has 65,000 restaurants under their name. Huge. Okay. They acquired this company for roughly around $95 million, which is just about $1,500 per merchant. They're extremely happy with this purchase. Okay. They, and also they went in a little bit deeper because the companies that they're acquiring is people have to think about it as like an old school type of sales versus new school on point of sale. Okay. So old school, you have what a lot of those companies like Vectron was doing, like what Venue Next was doing, a whole bunch of this old, or what's the other one? Rebel Systems, these sort of companies, where they're selling hardware and software for their point of sale, but then you still need to go out and find a partnership with a payment processor. And then so you're paying for one thing and then having to find a client that's going to pay for payments over time. Shift4 is saying, hey, why don't we kind of do this both where we are the distributors of the hardware and software, but really payments is the real, like, that's the real selling point. That's the recurring revenue. That's how we're going to make our money. You see other companies do this, right? PayPal does this, Square does this, Shopify does this. There's a bunch of different companies that will offer it in this sort of new niche of POS systems, Lightspeed. And so the idea is just shifting from one-time sales to recurring over time, like starting smaller, but over time the lifetime value of that client goes up. And so whenever they're acquiring these customers, it's very hard for analysts to sort of model it because they're going to look at the balance sheets or the financial statements from these companies and say, okay, that's how much they're making. This is how much Shift4 is going to acquire in terms of new revenues, new profits. But that's just not the case because they're going to wipe away their existing business model. What they're trying to do is just get those clients, and that's very hard for a lot of people to sort of um, you know change their head around of going, hey, the companies that they're acquiring is not actually the business that they're going to move forward in. So thought that's pretty interesting. Shift4 investors knew that already, but just trying to reaffirm that, get that into retail investors' heads that they have a real style around this. Another thing that they said was, this was their first real acquisition into Europe. Now they've been there because of Finaro, but this is like, now they're starting to do the customer acquisition approach in that area. The fun thing about this is that essentially what they're trying to do is get payment processing in Europe, but that's not necessarily as common as it is in North America. So they said two things that are really pulling them down in Europe. One, the debit mix of the amount of payments that are actually flowing through is much higher, which means that their earnings are much lower. Not as much fun. They want credit flowing through the system. Secondly, still a large portion of the actual payments are in cash. They said in Germany, it's still about 40% cash. Well, that's way too freaking high. Okay. Taylor says this, Jared says this. Over time, that is not going to stay this way. Okay. They are going to flow to more modern systems, especially whenever you have companies that are coming in offering better solutions. So the more convenient that you can make it to switch to digital payments, the more likely people are going to do so. So, yeah, I thought that was interesting. Um, let's see what else were some of these notes that I thought were quite fun. They said that there's a lot of companies that they've thought about acquiring for some time. Appetize, which is a company that they actually own, was one that was on their list for quite some time. And they continuously sent them like, okay, here's our bid. If you want to take it, go ahead. If not, leave it be. And for many years, Appetize was saying, no, 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 no. They eventually bought the second largest player in that space, which was stadiums. And so Appetize was the largest company for sports and entertainment payment processing and terminals. And then Venue Next came along, being the smallest one, having a pretty unique set of tools, like being able to do mobile ordering and stuff like this. And so they bought the second place one to compete. And then eventually Appetize said, hey, if you're willing to give us this price, then you can have us. Sure, we'll let you have it. So Shift4 is like, okay, so we can buy the first place company in this list and the second place. So now, anyway, they own 75% of the stadiums in America, which are, processing payments and everything. It's very exciting. But one thing that I want to say there, so they talk about owning 75% of stadiums. It's not that they own 75% of the total revenue that can flow through those stadiums. No, it's that they have a relationship with 75% of stadiums. So they can grow very much vertically, but they have a very wide base horizontally. Let's see here. And that's only in America, by the way, 75% in America. Now that they're expanding internationally, who is to know? Oh, so they were just talking about how much success they've had in like ticketing and sports and entertainment and stuff. And they said 4 years ago, literally, the amount of revenue that we made from these industries were $0. Today, they practically own the markets. It's very interesting to see, 4 years from now, what are the segments that they're going to be in that they're currently not in that is going to continue that growth rate. So they were trying to harp on that pretty strong, which I thought was fun. They said from every single company that we've ever acquired, every single chief technology officer, CTO, is still working at Shift4 in some form of another. So they might not be the chief financial or chief technology officer of Shift4, but they are working in some sort of department to bring, that engineering mind. It's very much a focus. I thought that was so interesting. Let's see here. Not too much else in terms of Shift4, so we'll move on. Why don't we cover something very fun, which happened today, which is Robinhood. 2 parts. Okay. First part is the numbers that they've released. May numbers. So first, funded accounts. Another 120,000 month over month. That's nearly 1 million new people year over year. Are there fintechs that do that much faster? Yes. Are we out of this extremely slow rut of growth? It's seeming like it. I mean, this is looking very positive so far. And most importantly, assets under custody continue to climb. Net deposits continue to grow. Cash sweep continues to be more and more in the favor of gold members. Okay, so we'll have to see how many users they actually have, but very much heavy in gold for their cash sweep, which is interesting. Now, Equities, huge. We have a new record for this past year. So March put up some pretty intense numbers. April did okay, but now we're seeing a break in that, whether that's GameStop, whether that's Nvidia, we don't know. Those are some of the biggest names. Tesla is up there, SMCI, shit like that. Options contracts, once again, breaking that, highs. That's almost 4 quarters in a row here of breaking new highs for option contracts. Remember, this is where they make by far the most amount of money. Crypto. So we're not going to break this 23.6, but we do want it to stay right around this range, $7 billion. Great. Month over month, it doesn't look phenomenal. But compared to where we were before, 2.1 to 7.1, we're in a completely new year. Great stuff. Margin books growing. We'll have to see. I think that the actual take rate on margin is going to be a lot lower because they've changed to be much more competitive. So we'll see how that's reflected this quarter, because they did it like midway through the quarter, so it'll be like half affected. But there's one statistic that they don't show off here, or at least one statistic that I track that isn't on here, which is total securities lending revenue. So let me go ahead and bring up their other page here. Total securities lending revenue is this bottom chart, which has been seeing breakouts, right? So before, the highest this year was 18 million. They saw a lot less than that throughout this time, at one point hitting, 11, actually 10 at the lowest here. But now in the last 2 quarters, 23 million dollars. It's a great way for people. Maybe they're getting the notifications out there. Hey, make a little bit of extra money on your stocks. People are enabling it. Robinhood takes advantage. So awesome stuff. Now, really quick on Affirm, because I was covering them earlier, but I didn't actually bring this up. They've also expanded some of their options. So pay in 2 and pay in 30 options. Pay in 30 is not what you think it is. Whenever I read that originally, I was like, what the heck? Like, you're going to make 30 separate payments? No, it's so pay in 2 is a purchase with 2 interest-free payments per month, or or pay in 30. Where is it? Split the cost. Oh, is it actually 2 free? Sorry, I thought it was make the purchase within 30 days. That's the way I read it. Where am I crazy? Oh, I thought it was one lump sum purchase within a 30-day time period, like very much like a credit card. Okay, then pay in 30 is absolutely crazy. 2 interest-free payments per over 15 months. All right. But they had a very great day today. Can't take it away from the investors. Okay. What else do we got here? PayPal. So PayPal did not have a great day. Apple is taking away a lot of their fun right now. People are thinking, hey, with these new developments, how much is that going to dig into PayPal's earnings? Guys, I don't think it is. I think that people need to realize how freaking global PayPal is, for one. Okay. 420 million users spread across 200 separate countries. They are a massive player. Branded checkout transactions per active is growing. Monthly actives growing. Like, they're seeing stickier user bases, not declining ones. What's declining is the growth rate. So whether that growth rate eventually hits 0 and then we start to see a tip off, I don't know. But I'm in this for a short-term turnaround. I still think that it's very possible, especially if they start to roll out Fastlane. It's seemingly like Fastlane is going to be, I don't want to say this. Don't hurt me, okay? It might be a shock the world product. I'm so sorry, guys. Seriously, the way I'm thinking about this, you're not going against Apple Pay. You're not going against Google Pay. You're not going against any of the other solutions. You're actually fighting against a user base or a service that has never had a competitor, which is guest checkout. Okay. There's this massive audience between 40 to 60% of checkout that ends up happening in non-sign up, no information taken, this sort of stuff. And then PayPal is going to end up servicing this solution. Okay. If someone puts in an email that they end up knowing based on it already has a PayPal account, then they can already use vaulted information to then say, hey, here's my name, here's my email address, make a purchase. They don't have to think much harder than that. And supposedly, the conversion rate gets up to, you know, 80+%, which is just unbelievable. They're saying that the average merchant is having double digit bump ups in their conversion on guest checkout. It's just insane. So that will see a ton of success. Whenever you're talking about merchants, some who are throwing through $100 million of business, 50 million, $10 million worth of business per year, to shift them over from, guest checkout making 10 less percent in terms of conversion, that is a massive, massive amount. Okay. They will pay for that in droves. So they need to get that word out there. They need to get this out of beta, roll it out for the holiday season this year. That's their plan. And actually see how it takes, right? If it does well, they're going to get rolled out through many, many platforms like WooCommerce. Maybe even Shopify ends up, adopting this for a bit. They do have partnerships with PayPal, right? So we'll see. We'll see how this ends up going. But big boost in earnings never hurts. Like they even brought up names like Temu and Shein being, complex companies to work with because they do a lot of cross-border transactions, and a lot of merchants can't really handle it the way that PayPal handles it. I don't think people give enough credit to the strength that PayPal has by being as old as they are, right? They have a lot of solutions figured out because they've been around for so long. And so they're winning a lot of these very big deals from some of these newer e-commerce players, like Temu, trying to shop like a billionaire. They're just bringing in the solutions. Another thing that I wanted to bring out from PayPal, and they're really talking about it a lot. And actually, let me bring up a DM because I saw this thing and I wanted to cover it with you guys. However, my ex is logged me out. Okay, that's good. Why'd that do that? Oh my god, they want me to authenticate. Okay, I knew that was going to happen. Bear with me a moment. But what was I saying again? PayPal. Oh, so their entire team is practically new now. Like they've got new engineering people for mobile. They've got a new leadership team for practically every single segment of the business. Most of their entire leadership team has completely turned around in just the last 8 months, almost entirely. Okay. It's freaking incredible. So, whenever you're bringing these people over from Stripe, from Plaid, from SoFi, from Affirm, like from Cash App, can we really honestly say that PayPal is just going to stay the same stubborn, non-innovative company going forward, or do you think that some of that culture is just going to get brought over from where those executives came from? I don't know. Like it definitely could be a very big sleeper play if that's the case. Now, where the hell is this? Okay. I want this DM. I'm willing to put in my authentication so I can log into freaking X. Sometimes X, honestly, is the biggest pile of shit that I've ever used. Like it logs me out and then will like log me out on everything like, oh, suspicious activity. It's only me. I've got 4 devices. Figure it out. Laptop, tablet, phone, desktop. Figure it out. No other company does this. And I'm not seeing like I thought it was going to be like a bunch of accounts like trying to do attempts signing in, but I don't get anything like, oh, people are trying to access. I get none of it. It's just it's actually shit. Now, where is this thing? I sent it to Roy, so I know So they brought this up twice. Okay, so let me show this off to you guys. I think that this is super interesting. Okay, here we go. I saw this comment a while ago. And Joanna here says, I work in the fintech space and am very familiar with the products and services that PayPal offers, as well as what they plan to offer. Excuse me. These things take time to build, longer than other pieces of tech because you need to get certifications from back-end processors as well as issuing banks. Sorry, my camera cuts me off here, so then I have to switch over to this one. Issuing banks and card brands. It's wildly impressive what they've been able to do so far. And over the next 2 quarters, the bigger products should wrap up. It should grow this year, but most importantly, 2025 will be massive. Okay. Also, they've shifted their commission structure recently. Instead of paying reps on top line revenue, they're actually paying them on net revenue, meaning the sales teams will actually care about profit margins for the first time in many years. You'll see a swing up in net profit within the next few quarters as many of these projects take effect. So, at first glance, cool, but how reliable is this? And then I started to think, Alex Chris has talked about we are going to just focus on meaningful, like profitable growth. We're going to drop this idea of top line growth. And then Jamie Dimon, oh my gosh, Jamie Miller just reaffirmed, she said, we have a new commission structure that is going to focus teams on transaction margin dollars first. So I think that Joanna is perfectly in this space talking absolutely, like that was from a couple weeks ago, as you saw. And then Jamie Miller absolutely doubles down on the fact that yes, we are actually incentivizing our users to grow in a certain way. And it's not just in top line revenue. I see someone talking about buybacks. So they are still planning on doing more than their total free cash flows is just over $5 billion. They said more. They have $17 billion on hand, but they want to be flexible with it if they see more ways to push and look for new innovations or try to land and expand in certain areas. Maybe they want to do big marketing efforts or something. I don't know. Maybe they want to acquire. But for now, they're keeping a little bit of cash on hand, but they're going to be spending more than what they're going to make in free cash flow this year. Okay. What else? The chat is going. What are you guys talking about? Not very reliable information. Absolutely. Take it with what you will with Joanna said. Geez, that was broken English. But it does seem to line up very clearly with what Jamie Miller is saying. So yes, take it with a grain of salt. Ross says ads. Sure, ads. Mark Reether is going to be there. He's going to make it work. I think that it's very interesting. There's not a whole lot of dual-sided commerce, Apple being one of them. And maybe that the customer experience that you have at PayPal with your PayPal digital wallet will be a more fun experience, better for you, saving more money than it will be at Apple. I'm fully aware that Apple is taking a larger percentage of the market share than PayPal is right now. That doesn't necessarily mean that needs to be the case. PayPal can win customers back if they have better solutions. One of those ways that I think is very impactful, Crossroads, I don't know if I'll be able to find his Twitter where he showed this off, but it was PayPal's cash back incentives, which was very, very exciting. I mean, you get 3% cash back on their credit card, and then with their individual companies that they work with, you can also get cash back deals with. One of them was like Walmart for 4% cash back. And so combine those together, 4% cash back at Walmart plus the 3% that you get at their credit card. That's 7% cash back at a place where you can buy practically anything. where most Americans shop at. That's freaking insane. Would the difference in consumer or like I don't know. I don't have Apple anyway. I'm a Pixel guy. I'm all Google Wallet. And PayPal is shit here in Canada, not offering me a credit card or not offering me um, personalized ads yet, but that's to their advantage. They still have much more to go. And PayPal even shows that off, right? Like they've been very clear to say like, hey, like everyone's talking about, is it going to be PayPal? Is it going to be Apple? Like who's going to be taking the lead in terms of digital wallets? Like 40% of people haven't even entered this field yet. Like there's still so many people that are still getting out cash, still doing it the old way, and will be switching eventually. It's not a matter of if, but when. PayPal is straight shit in Canada. There's no reason to use it. No one uses peer-to-peer payment systems here. We use Interac, which is just you have an email, I can send you money for free almost instantly. So we don't really have any of that. And then if you're not going to offer debit cards or credit cards or saving account rates or anything like that, then I've got no reason to keep money on the platform. But if I am on a website and I see that PayPal is an option, I most likely will choose them just because that I know that my card details will be, blocked. There'll be that extra layer of safety. Yeah, we don't have Venmo. And it most likely won't come because that's just not how Canadians send money. Um okay, so let's talk really quick. Tomorrow is Chris Lapointe on a fireside chat. No Anthony Noto, but Chris Lapointe still drops some bangers, but Anthony Noto still he's the guy. That's who I wish I heard from. But uh yeah, that I'll be streaming that. That's 9:55 a.m. Patrick, we have Wealth Simple. Yeah. Okay, so shout out to where is he? Is he in the chat? Michael Regan. I think he's here. Anyway, Michael has found my Wealth Simple cash tag and he sends me like $1 every day just saying, "Hey, can you talk about this today?" It just like shows up in my bank. It's fucking weird. But cheers to him. I appreciate it. But yeah, we do have Wealth Simple. No one uses it though. I mean, no, so that's not true. I use Wealth Simple for most of their products, but not as a peer-to-peer payment system. It's fast, but I have to guarantee that the other person is also using that bank. It's not popular enough. Chris Lapointe is Vlad Tena's father? Maybe. Maybe, baby. So ARK Invest also, maybe I'll do this tomorrow. I'm going to pass that news on to tomorrow. They had some nice things to say about the Robinhood Bitstamp acquisition, talking about the size and how much we actually paid for it. It was cool. Anywho, appreciate your time, guys. If you guys like the stream, hit the subscribe button. If you really like the stream, comment down below. I don't know. I didn't really have anywhere to go with that. Thank you. Appreciate your time. Bye for now.